Hello traders, you're welcome back to the Forex Geek channel, and I especially welcome you to this video where we are going to be discussing pullbacks. All right, now pullbacks are golden entry points if you know how to spot them. Okay, so in this video we are revealing the best pullback indicators on TradingView to help you enter trades with more confidence and clarity. No more chasing breakouts or missing the move. Okay, it's time to trade smart. Now, every trend has a rhythm. That is impulse, retrace, continuation, right? Price does not move in a straight line. So there is always an impulse, there's always a retrace, there's always a continuation, right? For a trending market, obviously. So the pullback is the pause before the momentum kicks back in. Getting in during that pullback reduces risk and improves your chances of riding the move. But not all pullbacks are created equal. That is why you need the right indicators to confirm them. First on the list is the Fibonacci retracement tool. The Fibonacci retracement tool is not just a visual guide, it's a framework. All right, it's a framework that shows key retracement zones like the 23.6%, 38.2%, 50%, 61.8%, 78.6%, and so on. These levels act like magnets for price before trend continuation. You can see in this particular example, the price retraced to the 23.6% before continuing to the, in the direction of the trend. So these levels act like magnets. You want to combine them with candle confirmations or structure for better entries. Next up is the 20 EMA and 50 EMA combo. So we want to add the 20 EMA and the 50 EMAs, both of them, to the chart. Okay, I'm just going to change the color for easier identification. So the 20 EMA and the 50 EMA combo, these moving averages provide dynamic support and resistance on the chart. During a trend, price often pulls back to these EMAs before resuming. Use them as zones, not exact lines, okay, for entries with confluence from from wicks or engulfing candles. Okay, so next up, the next indicator we're going to be looking at is the relative strength index. All right, the relative strength index is also key for pullbacks. Basically, when the RSI dips below 60 in an uptrend or rises above 40 in a downtrend, it often signals a temporary pause before continuation. So you should watch out for those zones, okay, to time your entry with structure and volume support. All right, now the next indicator we are going to be looking at is the trend meter. Okay, we're going to be looking at the trend meter indicator. All right, this gives you a clean visual of trend strength and potential pullback opportunities. When the trend remains strong but shows a temporary drop, that's your window for a strategic entry. You will notice that if there is a prevalence of bullish trend, bullish momentum, the lines across the 4 layers or 5 layers, the lines across the 5 layers are going to be painted green. The green dots, the green line, showing that the trend is strongly bullish. But then when you start noticing some appearance of red within the bullish trend, it shows pullback. On the other hand, when the trend is bearish, you're going to notice the domination of the red And then when you start noticing the appearance of green, the green dots and all of that, it shows that there is a pullback. Okay. Now let us look at the QQE MOD indicator. The QQE MOD indicator. This is a powerful indicator for retracements, right? It mixes RSI and smoothing to signal momentum slowdown. So just look for the histogram pullbacks before realignment with the trend. When you notice that a trend is ongoing, for example, this is a bullish trend and you're going to see blue histogram bars. Now, when you notice that the length of the histogram bars start getting short, because when the trend is strong, you notice that the histogram bars, the subsequent bars will be longer than the previous. But when you notice that subsequent bars are now shorter, it shows that a pullback is incoming. Okay, so you want to pay attention to that. Okay, whether it's a bullish trend or a bearish trend. Okay, so this helps filter out fake outs and confirms the market is simply taking a breath, not reversing. All right, because so long as the bullish momentum is still strong and the histogram bars remain blue, all right, you can still be looking out for bullish entries. But when the bars change to gray, it could be that a reversal is incoming. All right, and same case for the sell. Now, it is always important to combine for confluence. Each of these indicators that we discussed in this video is strong alone, but they are even better together. You can actually pair your Fibonacci levels with your exponential moving averages, maybe watch the RSI levels, and then use visual confirmations from the trend meter or the QQE MOD. So that's how you build confluence and enter only when everything aligns. It is better to enter a trade when you have enough confirmation. If you have more than one or two indicators telling you to buy, that's a confluence. If you have more than one or two indicators telling you to sell, that is a confluence. So you want to enter such high probability trades when you have multiple indicators telling you to buy or to sell at a given time. All right. So these are the best pullback indicators on TradingView, or rather some of the best. They're tested, trusted, and used by traders worldwide. If you're tired of chasing breakouts and want smarter, cleaner entries, these tools are your go-to indicators. Okay, if you learned something new, hit that like button and subscribe to the channel for more high quality trading content every single day. Stay sharp and stay disciplined. I look forward to seeing you in the next video.